Welcome to Thank You for Your Reply, where we dive deep into the strategies and insights of real estate's most innovative professionals. I'm your host, Rich Pedersen, founder of the Reply AI. At the Reply AI, I take a consultative approach to helping businesses integrate automations and AI tools so they can get back to working on their business, not in it. In each episode of the podcast, we explore the real practices driving success in today's market. No fluff, no pitches, just real conversations with real experts sharing real results. Before we dive in, please make sure you subscribe to the podcast. Your engagement helps keep the show running. Without further ado, here we go. Hey, everybody. Thanks for joining in another episode of Thank You for Your Reply podcast. Today, we are talking to Erika Rae Albert, broker at E-Rae Realty, her realty company in Austin, Texas. Thanks for taking the time to join us today.
Of course. Happy to be here.
So if we could start off, just introduce, tell me how you got started in real estate and also what led you to start your own brokerage company.
Yeah. I think like almost everyone else in the industry, I kind of fell into real estate. It wasn't like, I always dreamed of being a realtor when I grew up. My background was actually in hospitality, and I got started in hotels and in hotel management, and then found myself working in the vacation rental space. I just decided to start my own vacation rental management company when I was in my early years, and one of my good girlfriend's dads was a real estate broker, and he told me that I needed a real estate license to be doing that. So I said, okay, well, I guess I better get one of those. So I signed up for an online course. I went on a trip to Mexico for 1 week and finished all my preliminary education during that time, and came back and took the tests, and then I was licensed. So fell into it that way. Pretty shortly though, after getting licensed, when you're in Texas, you have to be with a broker. So I was joined Keller Williams, which is, big player here, especially in Austin, and started learning about traditional real estate sales, and ultimately ended up deciding that, I really wanted to work on that rather than the vacation rental management business. So that was about 11 years ago. And I found my way into working with a lot of different types of clients. And at some point I realized that I definitely had this background in the vacation rental industry, and there was a gap in the market with a lack of realtors who could assist investors looking to purchase properties for the use of a short-term rental. And so I definitely honed in on that niche over the years, got my broker's license back in 2020, and have been rocking and rolling ever since.
Yeah, so you're kind of spanning between traditional real estate and then the short-term rental investments. What are the different factors that you're tracking for those segments, and are those the numbers that are guiding your strategic decisions at all?
So absolutely. I always like to, kind of clarify, I'm not in the management side any longer. I strictly work with investors that are looking to buy and sell properties that they are going to use as short-term rental investments. And quite frankly, whenever I'm working with a traditional buyer or seller, I'm like, oh my gosh, this is just so easy, because you have to worry about all of the things that you worry about on a traditional buy or sell, plus a whole other set of criteria when you're working with short-term rental investors.
What are some of those extra things you have to worry about?
When I'm working with a short-term rental client, there's a few different items we're concerned about. So we're looking at regulations. First, you want to be able to legally operate it as a short-term rental. And what that means is understanding the various municipal regulations, understanding the deed restrictions, understanding the HOA rules and regulations. And before a property can even hit my client's inbox, I have to verify all of those things and make sure that they can legally use it for the purpose they want to use it for. Second, we're looking at it from an investment perspective. Are the numbers going to work? So we're analyzing the income potential of the property, and the income potential, the metrics for that vary greatly based on how well it's operated. So it's not nearly as straightforward as running even long-term rental comps. And the data sources to provide those estimates are also not nearly as regulated and controlled as you would see with a long-term rental. So before I can even, put it in front of someone, I'm trying to see, okay, A, can you legally use this for the purpose that you want to use it? And B, is it going to make financial sense as an investment for your purposes? And those two processes just take a lot of upfront time, energy, and due diligence.
It's like these filters of varying size that you're putting the property through to see if it comes out the other end.
I mean, you can filter based on number of bedrooms and bathrooms because, yes, homes with more bedrooms and bathrooms are going to generally do better on a nightly rate. But that only gets you so far because you can also, you can have ones that are smaller and it's based on amenities and it's really based on comparing the entire package to like comps. So the amenities that it has, the location, and the size, all of these different factors play into ultimately how well it can do. And that doesn't even count everything that comes after you close, how well you furnish it, how well you manage it, how attentive you are to guests, which really ultimately plays a huge role in how much money you're ultimately going to make off of a given property.
Yeah. So that's interesting, all the little extra things to consider. In an earlier conversation we had, who mentioned that you're working on a little something that was maybe inspired by that.
Yeah.
So that you're developing a platform for short-term rental properties with investors.
Absolutely. So, my biggest problem over the years has been, I'm constantly searching for these properties that I think would make great short-term rental investments. And then I'm constantly getting in these buyer leads that want to purchase properties to use as short-term rental investments. But then the ability to match the two, it sounds like a simple problem, but it's quite challenging when you have so many in each category. So what I've really been trying to do over the years is develop different systems that would make this easier. So a few years ago, what I developed was basically a web scraping tool that could go in to my MLS and it could grab all of the properties that I hand selected and put into various carts. So right now, every day when I see a property that could make a good short-term rental investment, I'm categorizing it. Either it's already an existing active short-term rental that's going in one bucket. It has the potential to be a good short-term rental. That's a different bucket. It has the potential to be a larger hospitality property where you have multiple units on a large acreage. Those ones have very specific, a lack of deed restrictions that would allow something like that. There's all these different buckets that I'm hand selecting properties and putting them in. Then this web scraping tool goes in, grabs the properties from the buckets, pulls it into a Google Sheet. In that Google Sheet, I have my VA giving a top line, rough estimate on the annual income it can produce each year. Then we just do a very rudimentary calculation for the ability to rank the properties against one another. So we use the purchase price over the annual revenue, and then we can see it as a percentage. And then this web scraping tool is constantly going back to the carts so that it can update the price, so that it can update the status. And then this sheet allows me to then be able to see all the different potential properties at a glance and have an idea on how much money they can make, because the vast majority of my clients are looking for a certain, cash on cash return. So now I'm working on taking this to the next level by creating a machine learning platform that can learn from all of my transcripts from my buyer consults calls. And it can take all of that data and it can match it with the data that is in this spreadsheet in order to be able to recommend specific properties to.
All right. And then, so is that still going to be sort of like your in-house app, or are you trying to develop that so it can be used anywhere across the nation or even just across?
The task at hand is trying to solve my problem.
Yeah.
What we decide to do with it afterwards, who knows? But I've always been the type of person that, yes, if I can create something like this and it's going to be of use to other people, why not share it with the world?
And then are you still going to be doing that, your little curating, putting it into buckets for it? Or is it
I mean,
going to
that
be
would be
doing that
another
itself?
element. That would
Okay.
be another element that it could be trained for. I mean, really anything that, a person can do, you can pretty much train a computer to do these days.
Yeah.
If there's a process and there's a system, it's just a matter of teaching it to do it.
As long as it doesn't involve like hands or something, or like
Right. Yeah.
yeah.
I mean, I mean, that's just like next year. That'll be fine.
Yeah, I'm sure. Maybe even at the end of this year.
Right. I mean, things are moving so fast right now.
Yeah.
It's crazy.
Yeah, it's like it felt like through last year, it was kind of like, oh, AI, it's kind of a fun little parlor trick, and and then come around the corner of 2025, and it's like you touched a third rail or something, and
Yeah, it's wild. Especially being in a city like Austin, where we have such a massive tech presence. And I mean, we have Waymo, which are like driverless cars
yeah,
driving around everywhere. We see these really cutting edge technologies in our backyard all the time.
Speaking of Austin, what are some of the unique dynamics of that market as a real estate market?
Well, it's an interesting time in Austin right now. We appreciated more than any other market, in the US during the peak. And now we're facing the response to that.
Snap back.
So snap back here. It's definitely been an interesting market. We have really high inventory levels right now. Honestly, it's a great time for buyers because we have so much inventory. They have the upper hand. You can definitely negotiate a lot right now. On the other hand, if you're a seller, it's not the ideal time. I've had at least 10 clients that have purchased in the past 5 years reach out to me thinking about selling, and every single one of them, I'm like, you're pretty much at the same value that you purchased your property for.
Yeah.
So let's come up with a different strategy.
So is that situation affecting the STR investor side of it as much?
No, it's good for STR investors right now. They're facing the same dilemmas that every other buyer is facing right now in terms of interest rates are higher, and it's getting tighter and tighter to make the economics work on a particular deal just with the higher interest rate. But overall, it's a more favorable environment, where they have the opportunity to negotiate and really, definitely, especially if you're a cash investor. I mean, great time to invest in Austin.
And so is there since sellers might have a difficulty selling due to the market,
Yes.
some of them turning it into STR instead?
Yes. Yeah, absolutely. Yeah, that's something I'm advising my clients that it's like you have you have to get creative. Either you're gonna rent it out long term, you're gonna rent it out midterm, or you're gonna rent it out short term for the short term, in order to get past this. And depending on when you purchase, long term rental just might not cut it. It might not pay the mortgage. So you kind of have to go to the midterm or short term in order to get the revenue just to cover you.
For the short term rentals, since there's those specific like regulatory and market kind of challenges, do you have a systematic approach that you use to help investors navigate the barriers, or are you kind of taking care of that stuff for them?
I mean, I've been doing it for so long that it's memorized in my brain at this point, but I have created various, resources to help them understand. I mean, my number one is I always tell people just don't even look in properties that are in an HOA, because 95% of HOAs prohibit short-term rentals. And even if they don't now, they have the ability to change their rules, and they could in the future. So it's a very risky one. So that's like, number one. Number two is understanding the different geographic areas. So the city limits of Austin it's not like you just make a bullet around where it says Austin on Google Maps and those are the city limits. The lines are all sorts of wavy and you have little pockets and it's crazy. And you have to understand that because what's in the city limits of Austin, those are under Austin regulations. If you get just outside of those limits, then you're in the extraterritorial jurisdiction. There, anything goes. There's nobody that has the ability to regulate short-term rentals in the extraterritorial jurisdiction. But then you go a little bit further, and now you're, in Dripping Springs, the city limits. And each of these cities has different rules and regulations. So I don't know, probably about 6 or 7 years ago, what I did was made a list of like 30 municipalities, and I documented exactly what their rules and regulations were at that time. And then I would continuously update that to have a running list of all the different municipalities and how favorable they were towards short-term rental investors. And then at one point, I took that list and I turned it into I made my own Google map so that I could visually represent the different areas. And yes, this is a good area to invest based on legality. No, this is a bad area to invest. And my clients can go in there and you can put in an address and it'll show you a color. It's like, if this is red, this is a no-go zone, or this is green, this one is a good area. That being said, these rules are always changing. And I really just have a pulse on exactly on what they are and what's going on, and knowing cities move really slow. So you're going to have an idea of, when they're thinking about changing the rules well before they actually go into effect. And so it's just continuously monitoring all of these different, local city council discussions in order to be on the forefront of what's happening next so that I can best advise my clients.
I like all your sort of techie solutions to things. Even before,
so I mean,
like before all this AI stuff came around.
Before all this AI stuff, so one of the simple ways that I made sure that I always was staying up to date with all of these things was I just set up Google alerts for every city within an hour of Austin, and then short-term rentals, Airbnb, STRs. And so every time one of those, regulation changes, every time one of those popped up, at least I'd be getting an email with the latest news.
I was going to ask about that as you were describing that. I was thinking, like, how does she know that it would be a job in itself just to know that a city had changed an ordinance.
Right. So setting up those Google alerts and then doing quarterly audits of the list.
And so is that still existing, that Google map?
It is still existing. Yeah. Yeah. And then I have all of those types of resources. Eventually I decided to create another website strictly for my short-term rental investor clients, just because I had, way too many resources. And so those are all housed on my website, ATXSTRS. for short-term-rentals.com.
We'll put that in the show notes for those listening.
Makes it easier.
Or watching. So with those two, your traditional real estate and your STR side, how did you develop that business model? And do you feel like you're do you like one more than the other, or like which one is bringing more success?
The short-term rental niche served me for a long time. It, provided me with a steady flow of clients, and the vast majority of my clients came from simply, writing a couple different blog posts that, basically chronicled everything I just told you. And for a long time, those fed me a lot of business, and it was great. Now it's getting harder and harder to find properties that are going to meet any of these investors' needs. And it's just numbers. The numbers just
it doesn't pencil.
It doesn't pencil. Just doesn't pencil as much anymore. They do exist, but it's getting more and more challenging. And I'm also feeling I'm feeling more drawn to helping traditional buyers and sellers in this moment.
Mm-hmm.
I think there's just something deeply, gratifying about about being able to help someone find this place that they're going to live in and raise a family and make it their home versus something that is purely about the numbers.
Yeah, and there's also, it seems like there's been a little bit of backlash against Airbnb for various political reasons.
Yes, that's true.
I mean,
And
there's other STR providers, but
yeah, there absolutely are. A new one just hit the market actually
what's that one called?
just recently. It's called Savvy.
Huh, okay.
I think it's about time because somebody needed to go after. I mean, they really haven't had much competition
Yeah,
at all.
shake it up a bit.
Yeah, shake it up. But I mean, you also have backlash from just properties being used as short-term rentals, no matter who the booking platform is. And some of those concerns are valid.
Or is that in Astoria? You basically can't really do short-term rentals. It's like 30-day, if I remember correctly, and that's supposedly because they housing is so tight, rentals are
Right.
hard to find.
Yeah.
Is that what the same issue in Austin, or?
No, but I was just talking to somebody who's buying in a property in Portland, and they have a similar situation. But what they do, I'm not super familiar with Portland, but I was just talking with someone yesterday about this, is she's buying a 2-unit property, and one of the units has to be a long-term rental because they're trying to tackle that same issue of housing affordability. In Austin right now, I'm not going to bore you with the complicated historical saga of regulatory changes because it's long and complex. But bottom line, right now, it's actually quite lenient in terms of the ability to get a permit.
But to your, I don't know how deep you are in the development of your platform, the STR platform. Are there features that you are prioritizing above others based on, like, are people testing it out, or are you just using it
We're
right
still
now?
in the development stage, so we're not
Okay.
even in like testing it. We're still like in the teaching it to
Do the thing.
feeding it information stage. And I'm not the technical person here, so I just
You're the director of the.
I'm the director providing the raw input, so unfortunately I can't tell you a whole lot, all the nitty gritty.
Yeah, well, we don't want to make it. We don't want to get too into the weeds on that anyway.
Yeah. But I mean, one of the things that we've been, another feature that we've been trying to figure out how we can implement is there's also this idea of, so, I'm saying the numbers are getting harder and harder to make it work. But if you can find a property that needs work and you can fix it up, then there's a lot more of those properties that then are going to make sense from a cash on cash return perspective if you are willing to put in the upfront capital to improve them. And so we're thinking, working with an ability for it to see what upgrades need to be made based on a picture, and then be able to calculate estimates for those renovation costs and plug those in as well. Yeah.
Do you have a team of realtors that you work
So,
with? Or?
I mean, I've been on a bit of a personal journey lately, and have I have had a team in the past and recently have gotten pretty bare bones at this point. So I no longer have any realtors working underneath me. I have one VA and I have a contract close coordinator, and that is about it.
So in Austin's evolving market, what specific indicators do you monitor to advise like the STR people and the traditional?
Regular people, everyone. I mean, all the common ones. I mean, you're looking at median sales price, you're looking at average days on market. Those are probably the two key indicators we're looking at. We're looking at, year over year growth. We're looking at month over month growth. We're looking at the number of active listings. We're looking at the number of, all the basic
The usual.
statistics, all the usual
Okay.
contenders. Also looking, at the number that have expired and been withdrawn, because those are indicators that are quite strong.
So is that what you're seeing now? There's a lot of expired ones, or oh no, because it's a buyer's
Yes,
market, right?
no, it's a buyer's market, and yes, we are seeing more expireds and more withdrawals.
Okay. Just because sellers being like, oh wait, no,
We
that's
tried to sell
too
it
low.
for 90 days and nobody put an offer in, and we're sick of people showing our house and having to get out, and we're not willing to lower the price, so they remove it.
Yeah, that'd be frustrating. So is it more, usually it seems like like realtors would prefer being a listing agent versus a
Yeah.
buyer's agent, but it seems like, would it be the opposite now?
I don't want to work with sellers right now. I don't want you to do something that's not in your best financial interest. Unless unless you really need to sell, tell me what your situation is. And if you really need to sell and you bought your house at least 6 years ago, or you put in enough improvements where you're going to be able to cash out on it, then I would love to help you sell. But for the vast majority of people that are trying to sell right now, I don't think that's, necessarily the case. And I would much prefer to work with buyers that have, it's a buyer's market.
Mm-hmm.
You want to buy right now. You don't want to be selling right now,
Mm-hmm.
unless you're just like, throwing money away.
Yeah.
Because that's the truth of the matter is I firmly believe in Austin. Austin as a whole is a great market in the long run. And if you're willing to stick it out for another, let's say it might be another 3 years, to be honest. But if you're willing to stick it out, you're going to do far better. But then also, I mean, for some people, if sticking it out means you're renting it at a loss, then it's a matter of calculating, okay, how long do we think it's going to take for this market to recover? How much of a loss how much of a hit will you take each month? And then running the numbers, because it may not be worth it. And you may be better off selling right now, even if you are taking a loss, because you would take more of a loss holding on to it. It just depends on your personal situations. But ultimately, I would generally prefer to work with buyers in this moment.
So if a seller came along and you'd probably be like, well, what you got? Tell me what you...
All right, I'm like, what's your situation? What are your goals? Let me run the numbers on what's going on and, what are the comps for your specific property? And then let's find the solution that works best. Now, if that solution is selling, absolutely. All I'm saying is that I've done this quite a few times already this year, and 9 times out of 10, that's not the solution.
Yeah, and it'd be hard to put yourself in the position to I don't know.
I don't want to disappoint people. I don't want, I don't want to be the one they associate it with.
Like, oh, she didn't sell it for, she didn't do a good job.
Exactly. And so, and that's the thing. And I'm not gonna, I'm not gonna overprice it, and I'm not gonna take a listing that I don't think I can sell. It's not worth my time, and it's only gonna make them unhappy, and it's not gonna help the client.
Yeah, it's interesting. So I think Astoria is also an interesting market. I'm in the process of putting my house on the market, and it has renters in it right now. And people seem to be buying.
Yeah.
Like 2 houses down, it just sold for a list price, basically.
Other markets are doing a lot better right now. I definitely know that we are anomaly, and things are selling in Austin, and we are still getting properties that do go into multiple offers. It's just not, it's not that many.
Not what it used to be.
No.
Okay. Well, like the opportunity to give some advice from your wisdom of your experience.
Yeah.
What advice would you give about balancing like quick rental returns with long-term property appreciation? You kind of hinted at it a little bit there with the currently, but
I mean, it just depends on what your goals are. I'm more of like, I think that you'll, if you can get something that's going to cash flow even a little bit in the short term, and it's going to appreciate well in the long run, I think that's a good bet personally. But, some people have different goals. So if you want to just make a bunch of money in a few years, then you're looking for something where you're going to get higher cash flow, and maybe not as the appreciation doesn't matter as much. And then it also just, I mean, there's so many different factors. It's like, well, do you have a really good W-2 job right now? And like, would you rather like, are you going to retire soon? And then you could, when that, you get that windfall from the appreciation, it's not going to hit you as much. It's all, I mean, there's so many different factors at play in every single one of these things.
Yeah, true. Okay. Well, bonus question. This used to be one of on my list of questions. Can you think of a mistake you made early in your career that still informs your
Yeah. I can think of specific examples and I can think of general examples. So, um, I think in general, when I first got started, I wanted to do everything. I was like, okay, I'm going to do open houses. I'm going to start calling expireds and withdrawns. I'm going to call FSBOs. I'm going to go door knocking. I'm going to create Facebook ads. I mean, I did all of those things and more. And I think that's the biggest mistake that a new agent can do is to spread yourself too thin going after all of these different things. If you can just hone in on one specific strategy or one specific niche, your efforts are going to go a lot farther. And then early on in my career, I made a mistake of trusting a listing agent on something. It was so silly. It was this table. So they had a built-in breakfast nook, and there was a table that went with the breakfast nook, but it was not attached to the property. And I had a verbal, this tulip table is coming with, but I never got it in writing. And I will never, ever make that mistake again because they took that table and it was not pretty. And I found a replacement table and I bought the table for my clients because that was my mistake. I didn't get it in writing, but I will never make that mistake again. Everything needs to be in writing no matter what.
never again.
Mm-mm. Yeah. It's funny though. You've learned so much over the years.
That's the best
And
teacher.
yeah, experience exactly. I had a tricky situation come up recently with a buyer client, and it was pretty complex, and it had to do with insurance requirements, and I was like, oh well, I've seen this before, and I was able to figure it out this way. And you know the everything's figure outable in real estate. It's just a matter of knowing how to do it. And when you've been doing it for a long time, luckily, you've got a pretty strong arsenal of past experience and a lot of good connections that you can call on to to be able to guide you along the way.
Make less mistakes and make better decisions.
Yeah, I mean, it's not even a lot of times it's not even mistakes or it's not even that you could have made a better decision. There's so many little obstacles that come up between the time you get under contract and the closing. And it's just being able to have the agility and the wherewithal to be able to solve those things as they come up. And usually I'm just figuring these things out behind the scenes, and half the time it to the client it doesn't even really register as an issue, but if I wasn't solving it, it would.
Oh yeah, and then you'd be hearing about it. Okay, well, Erika, thanks so much for spending time today with and sharing your wisdom and knowledge and experience.
You're so very welcome. I enjoyed talking with you.
And yeah, maybe we'll get you try to get you on here again when you launch your app.
I would love that.
That wraps up another episode of Thank You for Your Reply. To our listeners, you can find show notes and links below this video, or if you're on audio, it'll be in the show description.